In this video, I will show you how, by using the power of multi-time frame technical analysis and order flow, you will be able to find the best swing trading opportunities in the market. So we will be taking a pair, analyzing it both from a technical and order flow perspective, and by using the combinations of these two different approaches that you can have to the market. By the end of the video, I will show you exactly where you can be looking for a potential trading setup on the actual pair that we are analyzing in the market. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so this is how we will be structuring today's video. There is a pair that I want to speak about that I believe is both very educational to analyze and is also very practical, because there is a good opportunity that we can be looking for on this pair to actually capitalize on the next move for the pair. And obviously I want to speak about the structure of the market, but I can explain the structure of the market when we will be doing the full analysis on the pair, because it will be even easier to understand the concept if you see a practical live application of the concept during an analysis, right? Because that is what you will actually do when you are trading and analyzing the market. So let's make a full breakdown of AUDCAD, both from a technical and order flow perspective, to see exactly where we can be looking for opportunity and speak about the market structure when we will go down on the daily time frame for the last steps of our analysis. So let's start from the monthly, as usual, making a top-down analysis, because always remember, the monthly, weekly, and daily time frames are the best time frames when it comes to the direction of the market, and the 4-hour time frame is the best time frame when it comes to the entry. So let's start the analysis from the monthly and try to keep this as educational as possible. On the monthly, what we can see that the market has created a W formation. Now, meaning that the market basically has created an impulse, a correction, a lower low, and a higher high. Now, in this case, it means that the market has created a bearish W formation. And this, like here, is an overextension in the market. Now, if you see a W formation, what you want to see as the next move of the market is to see a retracement, basically to see the market make a retracement from this impulse, and the target to the downside of the retracement is exactly the neckline of the formation, aka the previous resistance here, now turned support at this area. So here on our live chart, we have this area here, which is the previous resistance, which is now turned support at this area. So basically what we want to see on a AUDCAD from a monthly perspective is to see the market make a move to the downside to complete this W formation at the neckline, aka the previous resistance, now turned support. So this is what we have on the monthly. What we can also notice is that this structure here that we have identified on the monthly time frame, so the neckline of the W formation, is not only the previous resistance now turned support here, but it's also a very strong historical level of structure, acting as structure support here against structure support here, and obviously broke to the downside, turn resistance, and now that the market is coming from above, is acting as support. But I will speak about more about the actual structure on the daily time frame. So this is what we have on the monthly, an overall downside target here with a historical structure level acting as our target and completion zone of the W formation. Let's go down on the weekly and see what we have on the weekly time frame. Now on the weekly, we have a market that clearly seems definitely overextended to the upside. We have all this huge move to the upside with 3 retracements, okay? We have this red candle here, we have this red candle here, and we have this red candle here. So 3 retracements, okay? Now you can see that the structure level that we have identified on the monthly is respected very, very precisely on the weekly. In fact, you can see that it was acting as perfect support here, perfect support again here, perfect resistance, perfect resistance, perfect resistance, and now that the market is coming from above, this is perfect support. And if the market will go down and test this level, we will also have the creation of this nice M formation and the possibility for a nice explosion to the upside, but that is more long-term analysis. Let's speak about what we have now. So this is a very important structure, which is our downside target, and we have an impulse, correction, and impulse pattern to the upside, which has already been completed with the market creating a higher high and at the moment rejecting the last impulse to the upside. So overall, we definitely would like to see the market start the move to the downside. Going down on the daily time frame, what kind of situation we have. Now on the daily, here's where I want to speak about the actual structure of the market. The last thing that I wanted to share with you about the direction on the monthly and weekly that I forgot to show you is that on the monthly, okay, if you want to measure this move to the upside, what you're supposed to be doing is taking your Fibonacci on the previous leg. That is what you're supposed to be doing every time, okay? If you have an impulse in the market and you want to measure the retracement, you take the Fibonacci on the impulse, right? But what is the impulse? It's simply the previous leg. So if you want information on this move to the upside, where is the last time that the market went to the downside? So the previous leg. It's exactly this one here, from the low to the high. And what we can see, by taking our Fibonacci from the low to the high, we can see that the minus 0.272 Fibonacci is lining up exactly with the current market price, and this is the target to the upside of the W formation. So the last leg of the W formation has reached its completion zone. Just something that I had forgot to speak about when we were analyzing the market on the monthly. Let's go back on the daily and speak about the structure. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. Now, when it comes to the structure, okay, where is the actual structure of the market here? It's pretty easy to see that the structure is here, right? Because this level here was acting as very strong resistance here, resistance here, resistance here, resistance here, resistance here, broke to the upside, turned support, and again support at this level. However, there is a very important thing to say. Where is the real structure of the market? Is the real structure at this wicks here, or is the real structure at these bodies of the candles here? Okay, so where the body of the candle starts, the actual closes. Well, the strongest structure is always at the closes, okay? Most of the times the market will respect the closes of the market, not the wicks. So that is why it's always important to just visually understand where is the structure, and to place your structure boxes. What you can do is just put them from the bodies to the wicks, okay? To the level where most wicks are actually touching your box. Now, a quick trick that you can use to actually identify the structures, so the bodies, is just use a line chart, because it will give you these angles here that are basically the closest. Okay, just a quick trick, but there is absolutely no need. You can just read the chart and realize that here you have very strong structure, which was very strong structure resistance here, which is now strong structure support at this level. So until the market will remain above this zone, it will be above the daily support. So you cannot be looking for a shorting opportunity, because you would be shorting at daily support. But as you know, we want to be shorting because from the monthly and weekly we have a bearish view. So what do we have to wait for? We have to wait for the structure to break. But before I show you exactly how we will be approaching this kind of situation with students, let's give a quick check at what we have from an AUD and a CAD perspective if we check the COT data, so the commitment of traders. So if we check what is going on the CAD, we can see that we went from having way more longs than shorts with 38k net positions, so 74k longs and 36k shorts from an institutional perspective, to a situation where we have way more shorts than longs with 23k longs and 58k shorts. So basically a clear shift to the negative side with a short exposure, okay, increasing from 19% all the way to 44%. So clearly hedge funds have been shorting the CAD. obviously following the prices of oil that has been crashing during the economic situation that we had. So clearly the CAD has been getting weaker. However, in the short term, we can see an increase in the net positions going back up to 16K, with long exposure increasing from 17 to 26K, bringing the longs at 31K and shorts at 48K. So the CAD has been getting stronger in the short term, which is good for our overall downside view on the AUDCAD. And if we check what we have from a CAD perspective, however, it's against our overall view to the downside, because we can see that net positions went from minus 54K all the way up to more or less the same amount of longs and shorts, with the long exposure increasing from 23 to 42%, bringing longs at 44K and shorts at 45K. So AUD has been getting quite strong, and in fact, all AUD pairs have been making moves to the upside, because the AUD has been gaining strength, because hedge funds, so the biggest speculators in the market, institutions, have been longing it. The market always follows their orders. So how we will be approaching this kind of situation with students? First of all, if the market from here will just continue to bounce away from this area, we are simply not interested in the move. If the market will continue to the upside, we are not interested in the move, because there are better pairs with better probabilities and better risk to reward to actually follow. But if the market will actually break this structure to the upside, then this extremely strong previous resistance, which is now turned support here, will be broken to the downside and turned again resistance. So if the market will give us a nice impulse breaking below the structure, then on the retest of this structure, we will have previous support, which is now turned resistance in this area. We will also have the confluence of the Fibonacci taken from the high to the low of the impulse, possibly at 0.382 and 50% retracement. And inside of this area, this is where we will have the best probabilities and best risk to reward. And as I said, monthly, weekly, and daily are the best time frames for direction. The 4-hour is the best time frame for finding a high risk to reward entry. So with students, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a 4-hour perspective, from a bullish market to a bearish market. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the continuation to the downside, creation of this impulse correction and impulse pattern to the downside, and completion of the W formation that we have on the monthly time frame. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.